All right. Thank you, everyone, for joining this session. My name is Allen Terleto. I'm the head of global partners and ecosystems at Cockroach Labs. I have the privilege and the pleasure to sit side by side with Kiran. Kiran's been in this BFSI vertical for industry for well over 25 years. He speaks to global executives on a regular basis. And I think we're going to learn a lot from the short time that we have together. And I'm really excited to get the insights from Kiran. So, Kiran, would you do us the honor of introducing yourself?
Yeah, thanks, Thailand. And I was hoping some Kannada dialogue from you as well, because that seems to be the trend, but I'll do it for you. So, Namaskara, Bengaluru. Glad to be here. Glad to be a part of RoachFest. Thanks for having me. Like you said, I've been in the industry for almost 3 decades now. For the first half of my life, I was a banker. So if anybody's wondering what I'm doing at AWS, I'll tell you over a drink later. But for the last 6 years, I've been at AWS, managing the Financial Services and Conglomerates business for AWS India.
Okay, fantastic. All right. So you've been around, you said, almost 3 decades. Let's go back just a single decade, and let's remember the headlines. So we saw things like catastrophe coming, the fintechs are coming, they're going to disrupt all the traditional banks. And fast forward to today, and we actually see these fintechs servicing these banks and partnering with these banks. Now, at the same time, we see the momentum building around UPI. We see the emergence of agentic AI. So, do you see this collaborative momentum continuing, or is this wave of disruption still to come?
Oh, absolutely. By the way, I'm guilty as charged. I was one of those bankers who was thinking that fintech is here to disrupt us and, it's going to be a completely different world. But completely different world it is, just that not in the way that the traditional bankers perceived. I think the fintechs actually bring a lot of life into the industry. They're disruptive. They're thinking out of the box. But the resiliency in terms of experience, regulatory compliance and all that is still with the traditional banks and the players who have been there. So it's a really good synergistic collaboration when they both come together. So the fintechs are bringing fresh ideas and the banks know how to underwrite, how to do it all in a compliant manner. And when they collaborate, I think really great things happen. And one of my neighbors at the table is from HDFC Bank, and I can use that as an example. HDFC Bank collaborated with a fintech Zeta and launched one of their UPI platforms called PaySap. Scaled beautifully, right? And then they launched a credit card, completely digital credit card called Pixel, again on the same platform, running on AWS, of course. So completely different credit card idea and product that is bringing innovation to life, backed by a bank like HDFC Bank. So I think the collaboration is here to stay. But that said, the competition is also going to be there. If you see the payment space, I talked about PayZapp, but if you see the biggest share of wallet in terms of the mobile wallets are not with the banks today. So it is with third-party providers like PhonePe, Paytm, or Google Pay. So yes, it did catch some of the traditional players napping, but I think they're catching up. So that's going to be the continuous process where some fintech is going to come, disrupt, innovate, but the banks are then going to come and put their might behind and collaborate in certain cases and compete in other cases. But at the end of the day, the customer is going to win either way.
Yeah, absolutely. Okay, so if in case anyone's here from a traditional bank and I scared you, just get off recruiter.com.
Yes.
You're fine. Kiran says everything's going to be okay. All right, let's just stick with fintechs. Something we've seen in the Indian market is the regulators are starting to come down on the fintechs. There's been some recent kind of headline news around that. And at the same time, the user experience, the momentum around UPI is really starting to push the traditional banks to move a little faster. So are we going to see this kind of convergence where the fintechs start to slow down and do their diligence and the traditional banks are going to speed up? Or do you think they're just going to figure this out and get back into the swim lanes?
In India, there's no slowing down. And I'll talk about that in a minute. But see, I think it was needed. If you look at fintechs today, they are no longer very small. Like if you look at lending, it's more than $1 trillion book. And if you look at payments, you talked about UPI. I don't know how many of you know, but we process more than 20 billion transactions a month,
Wow.
right? So which averages to over 600 million transactions a day, and it's supposed to grow to 2 billion per day by 2030. Or if you look at capital markets, the retail investors are growing so much that they were getting into a lot of very speculatory instruments like futures and options, and SEBI had to intervene recently. But the point is, the market is still very resilient, and a lot of retail investors are coming in and participating in it, which was not the case a decade ago. Or if you look at insurance, same thing, right? It's still very underpenetrated. Probably less than 5% of the population has the right amount of insurance. But the government is pushing a program to get everybody insured by the time India turns 100. And that's another part, right? We are less than 80 years old. And as an Indian, I'm sure everybody here will resonate with it. It was a fantastic moment when we became the fourth largest economy a few months back. We surpassed Japan. So in India, nothing will slow down. But as the businesses grow, it was just the right thing to do for the regulators to come in and provide a little bit of discipline around the activities that the fintechs were supporting. But that's to say, that doesn't take away their ability to innovate. I think the regulator, to be honest, has been very progressive. They have allowed businesses to take a risk-based approach. So they are letting, whether it's fintechs or the large banks, determine what risk they want to take. And as long as they have the right mitigants, they have the right controls, the RBI is perfectly fine. In fact, our insurance regulator is considered one of the most progressive regulators. They are now allowing for a whole lot of innovation, and the time for them to take to market is less than a day now. So it was probably many months just a few years ago. So I don't think there's going to be any slowdown at all. I think the way our economy is growing, there's no room for it. But yes, a little bit of regulation for the sectors that have grown very big probably is not a very bad thing. But they've all taken it in their stride, and we see a lot of activity around regulatory compliance on the fintech side. And to your point on the banks sort of rising up to the challenge, like I said, I gave the example of HDFC Bank. But if you look at most of the banks, you need to, I think Spencer mentioned something that I found interesting in his keynote. You talked about not going to the teller. That was a thing of the past. Actually, it was not in India. Even 4 years back, we were a branch-based banking system, or maybe 5 years back. Branches were the number one channel of engagement for the banks. COVID changed everything. So when we went to one of the stringent lockdowns that the world had seen, suddenly the banks were scrambling on how best to engage their customers so that the business doesn't stop. And that's where, the banks started innovating. And very honestly, we were one of the enablers as AWS, where a lot of them brought to market end-to-end digital onboarding for the first time during COVID in 2020. And that was possible because they were open-minded. They were willing to leverage cloud, which until then probably they were not as much. And our policymakers were also very progressive. They brought in e-sign, e-KYC, video KYC at the right time. So I think I see from my vantage point, both sides, the banks, the traditional banks rising up to the challenge, innovating, coming up with new products, new experiences, a lot of investments going to make that happen. And of course, the fintechs rising up to the occasion to make sure that their underwriting processes and their regulatory compliance is up to par as well.
Okay, all right. So not necessarily a convergence, but fast and faster, and both innovating.
Yeah, I mean, you can say it's a convergence because the fintechs are on one side very innovative, very nimble, fast, agile, but maybe not having the same discipline as yet. When it comes to regulatory compliance as the traditional banks. And on this side, very compliant, very conservative, but now moving to the right, innovating fast, being more nimble. So that's where the convergence is happening, and they're learning from each other.
Makes sense. Okay, so a different risk appetite. We just heard the CTO of UB talk about the value of Cockroach CB being able to deploy across AWS, but in the same way on premises. As you know, we can deploy across the two regions here in India to maintain data residency, but also local zone and potentially AWS Outpost. So, what is the value of a technology like that can deploy in a hybrid state in order to give customers operational resiliency across multiple regions?
Yeah, a great question. And I think if you heard Bharat speak, there was a lot of emphasis on resiliency. And that's what we are saying, because when the economy is growing this fast, uh, one of the biggest things that you'll see is every aspect of your system is tested. I know, Bharat, you said that UPI is not as complex. I think the banks would beg to differ because when you have 600 million transactions coming in a day, every part of the system is tested, right? And of course, this week there is the sale that Amazon is having, which means every core system out there is being tested because the average transactions in a day probably would have gone to probably over a billion or so. So I think there is resiliency is what the regulator is also focusing on. And if you see the central theme of focus where they have, in fact, had a few actions on some of the banks, it is all around resiliency because without a very robust and resilient financial system, the economy can't grow. The economy can't progress. So it has to support and it has to sort of be resilient. And like I said, if you're going to go from 20 billion transactions in a month to 2 billion a day, you can't afford to not be resilient because every time you have a downtime, that's commerce stalled or that's some other activity stalled. All those have a direct impact to the economy. So resiliency is absolutely the focus right now. And partners like yourself, when I go to my customers, become that much more important because of the unique solutions that you bring to bear. Of course, there is always going to be need for different kinds of databases. But I think the stage where we are, some of the low-hanging fruits are done. And today, when I go to talk to my customers, the modernization is around the core systems, whether it's core banking, LOS, LMS, some of the systems that even Bharat mentioned. And all of these will be handling massive volumes when you look into the future. So the need for a resilient database like this will become that much more important over the next, I would say, 2 to 3 years to transform into. And then, of course, after that, there's going to be a whole lot of others to follow.
Yeah, absolutely. And we heard Spencer talk about how it's going to progress into that agentic scale and really take it to the next level. So the Indian market, as you all know, is just a bit cost sensitive. We heard, again, Bharat talk about the cost-sensitive nature or the way that Cockroach DB was able to reduce some of the costs. And of course, doing that with deployments across Graviton is one way to do that. So I personally had many different conversations with executives and product leaders across the Indian market. And I found that some of them are actually trading off resiliency for lower cost alternatives, understanding the risks. So I'm sure AWS is not immune to seeing things like this for some of AWS's resilient products. So how do you have these discussions with customers about the cost benefits of these decisions?
That's an interesting question because, that's a day-to-day conversation for us. And yes, we are as Indians very cost sensitive, but we are also very proud of it because we have a knack of pulling it off. I mean, we all know about how much we spent to get to the moon, right? So that was less than the budget for the Hollywood movie. So I think we have a knack of pulling it off. In fact, there is a term here, we call it Jugad, that we find ways to make sure that we get to the destination at the lowest cost possible. So from that perspective, I think what has changed, Alan, is I don't see those trade-offs as much these days. I think those were the past. Yes, I was joking about the cost-sensitive part a little bit, but it is true. They need to be cost-sensitive because of a different reason, not just because they don't want to spend, but the amount of investment required right now is immense because Indian financial services industry, and that's the industry I'm most familiar with, is going through a massive transformation. The digitization that we are seeing is enormous. So, and like I said, just 5 years back, we were a branch-based banking system. So the amount of investments going into modernizing every application, including the core, amount of investments going into new technologies like generative AI, because nobody wants to be left behind. And generative AI, in a lot of ways, has proven successful. I know that there's a stat that says 95% of, I think it's the MIT study. I think that's your next, you're probably going to go there, because I don't think any conversation is complete without Gen AI. So I'll wait for your question on Gen AI. But the point is, there's a lot of investments that the banks, the insurers, they all need to make. And when they want to do that, they obviously want to get to a lot of priorities in the lowest budgetary allocation that they have. And also, look, this is a phenomenon world over, right? With generative AI and such technologies coming in, there's also an expectation that there is increase in productivity. So that again puts stress and costs, and we all know, right? Whenever there's a cost pressure, the IT budget is first on the chopping block, and maybe a little bit of marketing budget and such. But in an environment like that, my customers, they have to prioritize, and that's where the cost sensitivity come in. But now the world has changed. The cutting corners is not in terms of resiliency because they don't have a choice. And like I said, in India, I don't want to name any bank, but one of the largest banks had some outages a few quarters ago, and the regulator stopped them from onboarding any new customers. Another large bank 3 years ago, similar situation, they were stopped from onboarding credit card customers for a couple of years until they could come out of it. So the pressure from the regulator on making sure the systems are resilient is enormous. So that trade-off today probably is not going to happen. Not to say that all of us, when we go sell to our customers, the cost is not going to be an angle there. But I think the trade-offs are more around prioritization of projects or the technology that they use. But definitely, when it comes to resiliency, my humble submission is they will look at the best technology out there that's going to provide them the highest resiliency, because that is the need of the hour for India to continue growing at the pace that we are growing.
Okay. All right. So resiliency is still king. Now, you mentioned Gen AI. I'll just jump to that question so you guys get the inside joke. What would a fireside chat be without an AI conversation? Let's just get right to it. So you were going to reference that a recent MIT study stated that 95% of Gen AI projects fail. Now, I don't think we're under any illusion that the investment into Gen AI will continue. And of course, we understand that it's going to transform over time, the BFSI market. But in your discussions with executives, are you starting to see a bit of a pause or maybe some more concerns or questions in terms of, how they're going to continue to invest into this market?
Not at all. There is not a single day that goes by without me talking about Gen. That's why I was joking. I think the study is right in one way, but the word that I would use is not fake. I think 95% of projects have not moved to production. But there are various reasons why it has not moved to production. So you take a use case, the use case just works, but not at a price point that makes it viable. So that's why it doesn't move to production, right? So for that percentage to move, few things need to happen. One, I think we need to collectively, as an industry, as partners, vendors, we need to bring the right use cases to our customers so that they can focus on what makes sense. For example, productivity, that's done and dusted. There is no customer of mine is questioning me whether Gen AI is going to help increase productivity today. Everybody's using it. But the challenge there is not so much about using it, but are they using it effectively? Because AI-driven SDLC is completely different from what the traditional SDLC was. So we spend a lot of time in coaching our customers more around that. Like, how do you really use technology the right way? That applied to any new technology. When cloud came in, and that even exists today, sometimes we get misunderstood that the cloud is expensive, but it's only expensive if you don't use it right. For those who have really good governance, who have not carried tech debt to the cloud, who have used the right cloud native architectures, there is a lot of value that we add to our customers. And GenAI is similar. New technology, not a lot of expertise. Everybody's learning through it, which leads to that 95% number. So I think we collectively need to bring the right use cases to bear. Second, I think as the volume increases, like anything, with any technology, I do expect the cost to go down. And we've seen that in just the last 6 months. I mean, we as AWS dropped our prices for the GPUs significantly. And I don't think we've seen the end of it because scale does bring the price down. So as more and more enterprises adopt it, I do expect the cost to go down, in which case suddenly the same projects that were deemed a failure maybe a year back suddenly becomes very viable. So that's my personal take on why that number is so huge. And I mean, maybe 95, 90, 85, we can debate that because it might be different days based on different regions. But it is a big number today that where projects have not moved to production yet. The second one is there is a lot of value that it can add in other places like underwriting. But some of the customers have not gone there yet because we do need some regulatory clarity around will that be acceptable. And for that, some of the technology needs to be mature, the explainability and all that needs to improve, which is coming with the reasoning models and such. That is becoming a lot more easier now. So you'll see that a lot more newer use cases will start coming in, which becomes very viable. And especially, Bharat talked about agri loans, right? As you go into tier 2, tier 3 cities where you don't have a lot of credit history and such, because India was largely a cash economy till recently. And today, even if you move away from the cities, there's still probably a lot of cash still in play. So there's not a lot of history necessarily about many small farmers or small companies operating in all these cities. So you need to look at underwriting completely differently. And that's where, some of these technologies will become very useful. But all that will play out. And if I'm a betting guy and I'm not, I think the next 2-3 years we'll see a very different world in terms of how generative AI gets leveraged in day to day.
Okay, so full steam ahead on innovation and investments. And with innovation comes commoditization, and with commoditization comes maybe a real qualification of what is success. All right, fantastic. Somehow we're already at almost time. So I always like to kind of end on an uplifting type of question. We're seeing a lot of kind of crazy news most recently. Yes, a lot of it coming from the United States. But what gives you optimism about our future? And specifically, what is the opportunity for India?
Unfortunately, we are also part of that news cycle. We wish we weren't, but c'est la vie, that's how life is. But that said, India is very resilient. And my humble submission, and I'm sure a lot of my compatriots here will agree, there's no better place in the world to live right now than in India. I mean, we just became the 4th largest economy. And by 2030, we are going to be an $8 trillion economy. We are the fastest growing economy amongst our peers, amongst the big global economies. There is a lot of people being, uplifted from poverty today. You see the roads in India today, of course, leave the traffic aside, ignore the traffic, but the roads are a lot better than 10 years ago. The airports are world class. I mean, I wish you guys could experience DigiYatra, but you can't. But we just walk in, our face is our ID card, right? I mean, how many countries can you have that experience? So that is the feel-good factors. But if you look at hard numbers, our economy last year grew at 6.5%, right? If you look at retail investors, number of demat accounts. The demat account is a equivalent of a brokerage account. It's not necessarily a brokerage, but that's where all your securities are hosted. That's expected to grow 5x over the next 5 years. Insurance is expected to grow 7x over the next 5 years. So each and every segment is growing significantly, right? And I can't wait for the day when we are the 3rd largest economy. It's going to come in the next 5 years. So every which way, I think we are very resilient and there's a lot of positivity. Even from the negative news that you see, 61% of our GDP is based on domestic consumption. So that's the reason why, yes, the news was terrible, but really on a day-to-day basis, we don't see that impact as much. So fantastic place to be, time to be here in India. And I think the next decade or two will probably be ours to shine.
Okay, all right. So you heard it here. India is the best place to live. Buy the T-shirt. Kiran, next time I come on a business trip, I'm going to need you to call my wife and tell her to come with me so she can get to experience the amazing culture and country here. So thank you so much.
Thank you, Alan. Thanks for having me.
Thank you.